Hello, 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 everybody. How y'all doing? This is Siam Maxey, aka the Mortgage Maven, MLS number 1093963, and I am back with another episode of simple information about mortgages. Thanks for joining. Hey, everybody, how y'all doing? Tonight's gonna be fire. We got a special guest. I told y'all I was gonna have guests on this season, and we have Gilbert Della Garza with DLG Insurance here on this show tonight.
How's
But
everybody
before
doing,
we get
guys?
before we get started with Mr. Gilbert, you know I got to start my podcast with a song in my head. Tonight's song is Legacy by Jay-Z. And I used Jay Z on another one, but his songs have been lining up perfectly with the trending thing on generational wealth. And this episode is about building your financial house through home ownership. So it fits in perfectly. So, as we go on into the song, it talks about leaving a legacy for his siblings, his mom, his dad, his children, children. And how do we do that? Well, at the beginning of the track, a young lady is on there and she says, "Daddy, what is a will?" So we're gonna dive right into our segment, Jesus, by talking about that subject. What kind of? So, Gilbert, tell us how what you do and
hmm
who you are blends in with our topic of building a financial wealth through home ownership.
Yes, ma'am, Miss Maxie. Well, thank you so much for having me on the podcast. Always a pleasure to be in your presence and your audience as well. My name's Gilbert Della Garza. I am a father. I'm a husband to a beautiful wife. I'm a young entrepreneur myself, and I also am creating generational wealth for my family and future generations beyond that. Um, it's a great segue from what you said as far as a will goes, because that's going to speak directly to what my piece of this podcast is going to talk about, to make sure that your assets, including your home, having home ownership, is protected for your loved ones, whether you're around or not.
Okay, so Gilbert, most of my listeners are first time home buyers. These are people who are getting ready to purchase their first home
hmm
with the hopes of leaving that homes for generational comes. What kind of tools are available in the insurance world that can help them ensure that will happen?
Well, first, congratulations to all your listeners that are first-time home buyers. It's a very exciting time to be purchasing a house right now, especially with the market doing what it's doing right now, and there's a lot of excitement in the real estate game right now. But if you were to purchase a home, when you are to purchase a home, make sure that you also take into consideration that your family doesn't own that home outright.
Okay.
So to offset that risk of them losing the house in the event that you're not around, right? That's that first excitement. It's your house. That's your place of peace. That's where you get to come home and see your kids. That's where they get to come home and see mom and dad. That's where you guys create memories. So you want to protect that home with a product called life insurance, right?
Okay.
So a lot of things happen when you buy a home. You're going to get a lot of stuff in the mail. And one thing it's going to talk about is mortgage protection insurance, not hazard, not to be confused with hazard insurance that you already had to get before you closed on home. We're talking about protecting your asset, the principal balance of your home, to make sure that that is paid off in the event of you, your spouse, or whoever else you're buying that home with, in the event of their passing.
So what you're saying is homeowners insurance and mortgage protection insurance are different things, and they're both needed, but not
Right.
required, but needed to
Yes, ma'am.
successfully be able to pass your property on to the next generation.
Correct, correct. So a lot of folks they take into consideration buying a home and they just want to get whatever's needed to get into that home. But what is needed and what you need to have are not necessarily in sync. Because to get a loan, you do have to have hazard insurance to protect not only the loan in the event of a peril or a hazard that happens to the home, right, to that asset. But you yourself, as the breadwinner, are the key asset that needs to be taken into consideration when purchasing a home, because your purchasing power needs to be replaced in the event of your passing. So
Okay.
that mortgage that keeps coming home, every month you're gonna get that bill. And if there is not enough money in the bank to pay that bill, then family no longer has a home where the memories were created. And the bank will take that house back. So what we do is we offset that risk with a product called either mortgage protection, which you're going to get a lot of mail about, that that pays off the mortgage, the principal balance of your mortgage in the event of your passing. So that means as the balance goes down, so does the face amount that gets paid in the event of your passing. There's
Oh,
also another product that you can get called term insurance, term life insurance, which is an insurance face amount. If you buy a house for $300,000, you got a 30-year mortgage, you get a 30-year term for the amount of that mortgage, and it stays fixed for the entire 30 years.
okay.
So comparing the two products, you got one that goes down as the principal balance goes down. Then you have the other one that stays level the entire time.
Okay.
Right? Which one would you rather have in the event of your passing? 10 years later, you want to have the one that has a fixed amount that stayed level because the mortgage has gone down from 300,000 to 250,000, but you still have $300,000 to net 50,000 to leave your family, and your house gets paid off via your will saying what to do with the life insurance.
Okay. So would just want to clarify for the listeners, mortgage protection insurance is very different than term life insurance because one is for the term of your life.
Mhm,
It ends when you end,
mhm,
but the funds can pay off your mortgage as well as send your kids to college, depending on how much you had. But
mhm.
with mortgage protection, it's just protecting the balance of your mortgage throughout the term that you have a mortgage. Now,
That is
what
correct.
happens if I get the mortgage protection policy and I refinance midway? What happens to that policy?
Well, if you get mortgage protection and you push the reset button and you refinance for a lower, a lower annual or the lower interest rate,
Hmm.
and then it's, for 20 years or 15 years, you'd have to reset the mortgage protection as well
Okay, so
because
I need
all
to
it does is
reach it.
pay off the mortgage. That's it.
Okay, so whatever the balance of the mortgage is,
Mhm.
they will pay it. Now, is that a rider that can go on my term life policy? Can I have both of them interchangeably at the same time?
You can because there's a rider, there's a document called collateral protection. A lot of business owners that take big loans out for their business, for small businesses,
Hmm.
they get a document called collateral protection where the bank is the beneficiary is of that amount, and then the remaining balance is goes to their family.
Okay, awesome, awesome. So that's what the videos that's running around are referring to. You go ahead and get the rider on your insurance policy, and the insurance covers your life, but the rider covers your property, and it ensures that the debt that you owe is paid off at the end of your life. So your children or spouse or whomever you're leaving everything to
Mhm,
does not have to pay it off in
mhm.
order for it to be free. The insurance pays it off itself.
That's correct. So if you already have a life insurance policy, and a lot of people do have a life insurance policy before, because their parents educated them on getting life insurance before they even bought a house because it's so cheap when you're younger.
Okay.
So they may already have a 500,000 or a $1 million policy for 30 years because mom and dad said get it right now because it's cheap,
Okay.
right? And you can add the collateral protection rider to that document, to that contract. Life insurance is a contract. You can add collateral protection to that contract with the beneficiary of the life insurance going to the bank.
Okay. Okay.
Mhm.
So, listeners, you heard it first here. on simple information about mortgages. When building your financial house, it's necessary not only to have homeowners insurance, not only to have life insurance, but to have insurance that will pay your mortgage off in the event of an untimely death, and that positions you for generational wealth.
Hmm.
Gilbert, any last words? Tell the audience who you are, where you are, how to get in touch with you if they have any questions or just want to take out a new policy.
Yes, ma'am. My name's Gilbert Dollar Garza with DLG Insurance Agency. We're based out of Katy, Texas, but we do write all over the state of Texas. My office number is 713-262-5366. If you'd like more information and you don't have time to call, but you want to email, info@gilbertdlg.com.
All right. So, everybody, we appreciate you, listeners. So, this has been Siam Maxey, AKA the Mortgage Maven, MLS number 1093963. Email us with any questions. The Mortgage Maven at yahoo.com. Text me on Spotify. Send me a message 713-320-1876 and check this video out on YouTube. Thanks for stopping by. Gilbert, thanks for coming.
Thanks for having me.